start
All
now.
right, bro, let's get it.
Yeah, it's getting. What was your success rate this week?
Mine.
Yeah,
We had two pairs that worked well, and the rest of the pairs they were just choppy. They didn't reach our areas of interest.
I'm seeing a lot of choppiness in the market, especially on the BTC front on the lower time frames.
Y-
Just buyers and sellers going against each other.
Yep, it's a cause of the Chinese New Year, and we have the Fed meeting next week, so market is waiting.
Do you think, I'm interested to see, I'm probably going to ask you to pull up a chart in a minute after, but did you hear about Iran?
Regarding are you
The
talking about
drone
the?
strike?
Yeah, I was looking at it, but I haven't like completely looked into it. Could you enlighten me then? What is it?
I don't know. I'm trying to get to the bottom of it because there seems to be two stories that are going on. One
Hmm.
is no one's claimed who fired the drones, by the way. People are
Hmm.
assuming that it's Israel.
Hmm.
Um, and that was targeted at an ammunition factory. But
Yep.
then there was also, like, I don't know if this is possibly a cover up or there was also an earthquake that's killed a few people as well. So whether the two are the same or they're mutually exclusive of each other and it's just a coincidence, I don't know. Um, there, I think in the last few sort of months, Israel and Iraq has just kind of been beefing up against Iran. So that's why a lot of assumptions are saying that Israel's behind the attack, but no one's claimed
Um,
to be behind it.
is this in the mainstream media or?
Yeah, it's everywhere. It is actually. It's on. I was surprised. It was on CNN
Mhm.
and it's all over the National, the Guardian. Um, but it was two different articles on CNN. One was in regards to the earthquake, and the other in regards to the yeah. So there was a 5.9 magnitude earthquake. So I'm actually surprised we didn't feel that here.
Yeah, actually. Well, it's been raining like hell the last few days, so I don't think we noticed.
No, that definitely would have made it feel apocalyptic. That level of rain and the shake-up we've been having. Yeah, so I'd be interested to see if there's been any impact on oil or anything like that from
Oh yeah,
there.
that'd be interesting. Yep.
Another thing that happened was the Azerbaijani embassy in Iran was under attack. That was yesterday. So a lot's going on in Iran.
Mhm. But sometimes when it comes to the mainstream media, they spew a little bit of lies when it comes to Iran, right? So
Yeah.
that's why sometimes agenda driven. I can't believe everything that I see. But yes, you're right though. It does affect the market because people believe what they see.
Well, yeah, completely. And there's no news outlet that acts as a voice for Iran that makes it into like media attention.
Yep, yep, that's true.
So I think, yeah, it is important just to find uh, opposing arguments on both sides because you know it's gonna lie somewhere in the middle.
True. Yep.
But let's
Oh,
go ahead. Let's begin.
all right, let's begin with fundamentals.
Yep.
Aaron, your audio is a little bit off because I think your window's open.
Hang on
Ye-
1 second.
Yeah, much better. Yep. All right, let's look at fundamentals. Let's begin with the last week before we start looking at this week. Yeah, last week was a choppy week in the market. We had Chinese New Year, and the markets are waiting to anticipate. They're anticipating the Fed meeting. So usually before the Fed meeting, a week or even 2 weeks before the Fed meeting, we start seeing a lot of choppiness because market is just waiting to find the bias of the Fed so they can start weighing in. Is market going to go long or short, right? So we had fundamentals this week. So let's look at what we had. So Monday, not much. We had monetary policy meeting with JPY, but nothing new. The same thing. Tuesday we had British Pound, UK, PMI, Purchasing Managers Index, right? And if you look at the numbers, you have services and PMI, right? So services, the manufacturing index, it came in a little bit higher, which still shows that inflation is persisting in UK, even in the manufacturing side. So prices are going up, right? But when you look at the services side, which is very odd, prices are the services prices are going down, right? So it's inversely correlated. This is very detrimental to the economy, right? So because this both numbers should be red or they both should be in green, right? So that's interesting there. With US dollar, we see price, we see the statistic, it came in higher, still showing inflation is persisting. Yeah, I think I remember when this statistic came on, market rallied a little bit. Same thing with flash manufacturing PMI, right? Still came in higher. So inflation remains persisting here. This is interesting. Richmond Manufacturing Index, we see it came in negative 11. So there is a contraction in the Richmond area in US. So we see a lot of mixed statistics at the moment, right? We're seeing inflation persisting in some places. We're seeing inflation come down, right? So it'll be interesting to see what the Federal Reserve do, what kind of decision they make. Wednesday, nothing really interesting. We see PPI input and output contraction in the UK economy. Yeah, this was the main event of the week. We had advanced GDP, right? So we have three GDPs results, right? The gross domestic product. We have the advanced, the preliminary, and we have the actual GDP. So advanced GDP is what comes out obviously in the beginning. So a lot of volatility is faced by the advanced GDP because this is the first number that comes out in the quarter, right? And if you look at the number, and we can compare it to the previous numbers, we see how the previous month was 3.2, but the forecasted was 2.6. So this fell in between. So the GDP did drop, did contract, but it was higher than forecast, right? So people were expecting a lower GDP, so we still saw a little bit of a higher GDP, right? If you notice the previous months, we see how we are still in the October range, right? We're between that October to December range still. So we still need to see a lot of contraction here, yeah? What else do we have? Price index. So this is durable goods orders, right? This came in a little bit lower, but nothing significant here. This is interesting. Durable good orders came in at 5.6%, way higher than the previous month and the forecast, right? So this is showing inflation still persisting. This number should come in lower. Yeah. Let's see what else. Yeah, this is another interesting statistic, unemployment claims. So this came in lower, right? So if the economy is contracting and recession is going to be hitting, right, hard, this number should come in red, right? So unemployment claims are still low at the moment. So still showing inflation is persisting. The labor market still has to feel. Yeah.
Which is it goes against everything that I'm seeing across like Twitter and in the news. Like this is the thing, like this is definitely like a bear market rally. I'm seeing a short squeeze in the market, but there's so many people that see a green candle, a green monthly, and they're flipping bullish,
Yep.
but seem to not understand where we sit in terms of the monetary regime. I'm going to call it that.
Yep.
People, I said this on the last call, like there just isn't enough pain that's been felt. Like there, I don't want to use like it's morbid, but there needs to be blood in the streets for the bottom to be out on this. We can't have gone through what we have to not see that level of, let's say, damage done.
Yep.
And look, you 2007, 2008, we've seen that, like how much damage there was there, and there is no one's feeling like especially here in Dubai. Obviously, it's a little bit detached and probably delayed from Western markets because we've capitalized off every macro event. But if you're looking at these Western markets, they seem so detached from reality. And what people are, I don't know, understanding the market and these candles, it just seems to be very emotional relief.
Yep, yep. You're right. You're very right because a lot of people are extremely euphoric. One green candle they see, and I end up seeing all of my YouTube feed suggestions showing Bitcoin is rallying, everything is rallying, right? So there's a lot of euphoria, and unfortunately, the euphoria is also based on statistics which are also manipulated. And just by looking at this simple statistic here, that unemployment claims is still low. And if you look at the previous results all the way through, even all the way to August, it's been green pretty much, right? All the time. So the market still hasn't felt, as you say, blood in the streets yet. So yep, you're completely right. We still haven't seen the bottom yet. I believe so, right? What else do we have this week? This week was interesting when it comes to properties, right? The new home sales, if you notice, people are starting to buy again, right? That number there and this number here, pending home sales are 2.5%, right? If you look at the previous month and the forecasted, the number is very, very high. So people are interested in, I think, now purchasing properties. But I think this is also euphoria driven because from what I remember, property markets usually feel the pain much later than the actual markets, right?
How
So
is
there's
this audited? Like it's obviously it says the
yeah,
source is the National Association of
yeah, National Association of
Realtors.
Realtors. If you want to take a look, let's see if we have the data here.
Just like from what it just said there on the brief, it said like before they've closed the transaction. From my perspective,
Yeah.
that's a broker's sales funnel. A how would this organization have any clarity on what's going on? You know, if the broker hasn't closed the transaction, they haven't had any interaction or engagement with a public office that is in charge.
Yep,
So there
yep,
has to be some
exactly.
level of audit, like how many they're auditing. And I'm seeing a lot of cancelled home orders as well. So that's on new builds. So maybe it is linked to that.
Yep, yep. Exactly. So it's interesting because it's pending. I mean, the word is important point here is pending, right? So it's interesting because I mean, if you just look at the definition here, you see they mention it's a leading indicator of economic health when it comes to the sales of homes, right? So quite interesting to see. But maybe there is some euphoria. I think I did notice some. I was looking at a few podcasts with a few of these US business owners, and some of them are starting to purchase these properties in US. So I think it is too early still to start buying. I think the bottom is not yet with the properties, but again, that's our bias. It's not financial advice. Yeah. Um, what is the so this is it for this week. The we didn't have heavy fundamentals, but the coming week is going to be extremely heavy. So the coming week, Jan on Monday, nothing. I think our market might range sideways. Tuesday we have Chicago PMI, and this is an important one, consumer confidence, right? This tells us a lot about consumers and their confidence in the market. Yeah. So this will be an important one. And this is a very interesting week because we don't only have the Fed meeting, we have NFP, right? Non-farm payroll, which measures the labor market, the strength of the labor market. Yeah. So before we have NFP, we have the precursor to NFP, right? The precursor to NFP is ADP, non-farm employment change. So we have this. We have also the job openings that will show us the strength as well of the market. And we have PMI, ISM PMI. So it's a very heavy week. Especially on Wednesday, we have ADP non-farm payroll, and then we have the Fed meeting itself. So we have the Fed meeting late over here, at least in Dubai time, at late 11 p.m. Maybe in UK, maybe in US, it might be on Feb 2nd, right? So we have the FOMC statement, the funds rate that they'll announce what they hike the rates at, and the press conference, which is also very important to see what Mr. Powell says, right? Because his comments will be weighed, and all the traders are going to try to foresee the future, right? Because the market bases off the trends and the moves of future, not the actual statistic itself, right? So if you look at the on the right, you see the previous the rate was at 4.5, and the market is expecting a 25 basis point hike. Now, I had opened this to show you as well. The market is heavily relying on a 25 basis point hike. But I think if the price does come, if the Federal Reserve choose to maybe hike by again 50 basis points, there's a possibility that the market can rally bullish in favor of US dollar, right? So US dollar can get stronger if 50 basis points again gets weighed in, because the market is now trying to weigh in this the pace of rate hike cuts, right? So that's why we've been seeing a lot of weakness with the US dollar the past few weeks. So this is going to be very interesting to look at what they do and the comments made by the Federal Reserve Chairman. Yeah, very heavy week with fundamentals. On so Thursday as well, we have UK, the central Bank of England. We have the monetary policy report come out, right? So this is going to be interesting to see with UK, because they've been a little bit all over the place when it comes to raising their rates. They are raising their rates by 50 basis points, if you notice, towards the right. And still, I think they should be still aggressive. I think they should take a aggressive approach, but still they have stuck throughout pretty much. I think the only time they took a 75 basis point hike was during November. Yeah. And during I think during November was the only time they took a 75 basis point hike, and then they have been maintaining a 50 basis point hike since. But in my opinion, they need to they need to keep the aggression with the rate hike still. It's way too low, in my opinion. With the consumers facing inflation at 13.1%, right? The consumer inflation, and the actual inflation number is still in double digits at 10.1. Unemployment claim also coming in this week. We'll see what happens there. But then we also, again, on Friday, we have a very heavy fundamental NFP. This will be the most important one when measuring the labor market. Yeah. And this is the first statistic after the FOMC meeting. So these statistics after the FOMC meeting will start getting weighed towards the next FOMC meeting. So that's how you got to look at these statistics, right? And the number, if you notice, is forecasted to come in lower, right? So a contraction in the economy. But if you notice all the numbers since May of last year, literally, right? It's been green, green, green. So we still see the labor market still persisting all the way through. So it'll be interesting to see what happens on this coming Friday, yeah?
Should we avoid trading any US dollar pairs? It looks like there's very, very heavy fundamentals across pretty much every single day of the week.
Yeah, but I think personally, if you have to trade this, you could trade this post FOMC, maybe the next day of FOMC. But if you want to actually avoid the getting wicked out and getting liquidity grabbed and stuff, it would be advised to avoid NFP weeks, because even historically, when it comes to my own trading, the weeks that I have red weeks are usually during NFP weeks. Yeah. So it would be advised to maybe avoid, or maybe take very, very high probability trades if you can. But because a lot of people are doing their prop firm challenges and stuff, so they don't have the luxury to just avoid the whole week. So it would be advised to take very high probability trades. Maybe wait till FOMC is done. Yeah. So that's for the on the fundamental sides of this week. Aaron, you want to get into the technicals?
Yeah,
What
let's
was
get into
that
the
tool?
technicals.
The Fed
Sorry, go
Watch
ahead.
tool? What's that Fed Watch tool you just been using?
Yeah, this is a CME Groups Fed Watch tool. Here they weigh in all the market sentiment when it comes to the Federal Reserve meeting. There's same Fed Watch. There's a Bank of England tool as well. Maybe I can show it to you. Let's look at it. Where was it? I think it was called BOE Watch. Yeah. Let's look. Where was it? Yep, here. I'm not sure why the page isn't working at the moment, but here you can see the Bank of England's the same way, the market sentiment. Yeah.
Yeah, so this is obviously when you're saying that the basis points are priced into the market. This is what you're talking about. Right?
Yep, exactly. Because if you notice, it keeps changing month to month, right? If you look at the statistic here below, you see December, how we had the market was weighing in even a 75 basis point hike at 27.2%. But now, this month it is at a zero, right? So depending on the statistics, the market sentiment keeps changing. So this is a important tool that you can use if you want, right?
Yeah, yeah, I'll add it to the circuit, mate.
Yep. Aaron, do you want to look at fundamentals, the crypto side?
Let's go to technicals. I need to pull up a chart. Nothing's really changed from now. Sorry, from last week.
Yep.
On the BTC side of things, I guess a key level is still 21,450.
Well, let me open it so you can take a look.
Yeah.
1 second.
And if we lose that, that will completely invalidate the move to 25,150.
All right. Yep.
But like smaller time, I'm avoiding trading at the moment. My
Yeah, I see
bias
the
is still,
choppiness.
yeah, it's way too choppy. There's no decision really on the smaller time frames. Higher time frames, we're still bearish. But that's the key level, 21,450. That will invalidate the move. So I think with FOMC, that would explain the choppiness as well, and Chinese New Year. So based on what happens on, was it Wednesday? We'll see what
Yep.
happens on BTC. One thing I did notice was the Fear and Greed Index, which is the crypto version of showing market sentiment. For the previous 2 weeks, we had very neutral on the index. Not the month before, we were completely in fearful. When we jumped from on a scale which goes from 0 to 100, we've jumped from 28 in fear to 53 in neutral within a week, and now the fear and greed is actually flashing greed. So it explains like RSIs are very oversold as well. I think there's a conflict now between what media is pushing, which is probably a lot of liquidity grabbers and hedge fund players that have just pumped a load of media and news out there, versus what is the reality. And the reality is we're still in a bear market. And this is just a relief rally. Monetary policy does not support any movement to a much higher side.
Yep. Yep.
On the ETH side of things, it's pretty much the same. Nothing's changed on sort of the higher time frames. 4 hour, there is a bit of a pattern forming now, which is a symmetrical triangle. So we've had 2 tests of the bottom trend line and 4 for the top. So if we do see a clear breakout above or under one of those trend lines, then we'll know where it's going next. But symmetrical triangles as a pattern, I would say, aren't a good variability or to form a bias. So I'm not relying on it too much.
Yep. Yep.
But I think that's all I'm looking at right now on the crypto side of things. I am limiting it to BTC ETH. But all coins are pumped. Solana seems to have had a bit of a rally. That looks like it's about to hit $30. BNB, this is an interesting one. I learned some stuff today on my hike, which I'll share with you guys in the group because it's a little bit confidential. But I'll share something there that's very interesting on the BNB side of things. But that's seen a good pump. It does look like it's also going to take a swing at 335 from its current price. But yeah, things are looking, I would say there's a lot of indecision still in the market.
Yep. Yep.
And I'm not too keen on anything. I'm still adding to spot positions just on a regular basis. So as of was it Friday, I did deposit and I did make a position into BTC. So I'm just holding at spot. Inevitably, this is still a good level to buy at. I'm spot buying BTC and ETH mainly.
Just them two.
Yeah, like they're more bankable, a lot more decentralization, less new. And we've seen how much, I would say, TVL, total value locked, that Ethereum can handle. BTC's got a bit of a track record historically. Other projects seem to be struggling in this bear market. And this is where I think we really start to see who are the real winners and developers as opposed to who's just building a Ponzi. There's still a lot of backfall or backlash from the FTX scandal. So do you remember that options project, Friction, that was based on Solana that used option vaults? They've closed down, I think, as of yesterday or the day before. they've asked everyone to withdraw their funds, and I think a lot of that comes down to Alameda being on their board and being one of the major investors behind it. So I think there's probably going to be a lot more come out of that, as well as the was it Galaxy's bankruptcy? Yeah. So that's when you're really going to start to see blood.
Yep. Eagerly waiting to see blood, bro.
I don't like to say it, but that's the truth. I am waiting for this moment where I just look around me and I'm smiling and everyone else is miserable. And that's when I know that it's time to put money in the market in like heavy amounts.
All right, so I'll move into, let's look at the Dixie first before we start looking at the other pairs as well. Look at Dixie. We have been calling out the support for a very long time, and notice we're still holding, right? And what do we see with the current week? Volume is dying off. The bearish volume is dying off. What if the Federal Reserve does come in with something insane and gives us a 75 basis point hike? That would shock the markets, right? It will just take off from here. So now the question here is if the weekly and the daily time frame can flip bullish, because the monthly still remains in a bullish structure, right? It hasn't broken completely. So if the weekly can break off structure here, and then the daily can break off all the structural levels here, or these areas here, maybe we might start seeing a rally with US dollar, because it's done all. Because if you notice again and again, what happens with price when price rallies this much over time, it needs to come down to grab in some liquidity from the market, right? So I think it might be done grabbing liquidity just by looking at this candle here, forming on our very important area of support. So let's see what happens this week and if price can still hold this support and flip bullish. Yeah. Let's now look into indices. Let's look at US 30 before we look into forex. Let's look at US 30. Look at the levels that are marked out. Price has still been very choppy, floating inside that area, right? So let me delete these first. Or let's look at the monthly, because we have just 2 days left for the monthly candle to close. And the monthly isn't showing us anything significant. We just, at the moment, we see price breaking structure and holding structure, right? Still holding a bullish structure. So nothing much. And price has been floating inside that range for the last 3 months in US 30, yeah? So let's look at the weekly time frame. Weekly, again, remains in a very choppy range. Again, like if you remember with consolidation, I say let the range break. And to make life simple, let me draw it out, what I mean. Let this area here break for us to see any form of high probability trades, because it's been floating inside, yeah? Obviously, you can trade the consolidation, but it would be quite risky, especially this week with the Fed meeting, yeah? Let's see. The weekly candle, what does it tell us? It doesn't tell us much, yeah? Because it doesn't tell us much. It's completely still inside a very tight range, yeah? So the weekly isn't telling me much, but we are still in consolidation. Let's look at the daily chart. Daily chart as well remains in consolidation. Again, that symmetrical triangle in a way is still present here. Yeah. If you notice price, that itself shows you a lot of choppiness, right? So I think at the moment it would be best to avoid trading US 30, in my opinion, if until price breaks this range. So let's actually mark that range out. Let's see. So range 1 could be up here. If you notice, we have a nice weekly structure point and the daily structure point. So I think this is the same area that we had marked out last week as well. Right? So we need price to break through here. And let's look at the bottom of the range, probably around here at 32, below 33, right? So around 32,800 or 850, let's call it 850, yeah? So that's what I'm looking with USDT, but not the highest probability pair at the moment, right? Let's look at SPX, S&P 500. So S&P 500 on the monthly at the moment isn't just like USDT, been ranging for a very long time inside this range, right? Since June of last year, or not even June, from May of last year. So we've been seeing a very ranging motion. But overall, if you look at structure, let's look at structure. Let me draw it out for you. What do we see? An inverse head and shoulder at the moment, right? There, right? Inverse head and shoulder. But it's not yet validated, because what does price need to do? Break these highs, the neckline, find support, and then take off. That's when this inverse head and shoulder is validated, right? But now it's giving us some indication, maybe it wants to go bullish, but not yet, not confirmed. Let's look at the weekly. So the weekly time frame, this weekly candle is showing us bullish engulfing, right? And if you look at structure wise, it does kind of look like a double top, right? There. So that's interesting. Because if you do
Kind of in line with
notice,
the Dixie as well, do you not think?
yep, I think so as well. Yep. Because if you do notice, price did all of this, broke through structure levels over here, right? Broke through all of these weekly structure levels, and if this had to go in bearish, the price should have held below here, right? Price should have rebounded here and took off. But at the moment, price, I think, especially last week, there was a lot of liquidity grabbing, stop hunts and stuff, and price did go up and now found that double top, right? Like Aaron mentioned, again, it's the Dixie, it's kind of aligning with that bias with the Dixie, right? So that's interesting. Again, I think this is it's quite choppy. But I think maybe we can start seeing weaknesses here. Let's see. Or let's say the weekly actually holds. We do see a double top. Actually, my bad. 1 second. So every time we do see the head and shoulder, I keep talking about the neckline, but we can also maybe look at the neckline when it comes to the double top, right? What do I mean? A double top, you see that, right? So the best course of action here would be for the double top to completely break at the neckline here. Yeah. Let me mark this out a different color, maybe orange. Yeah. Let me make it a little bit thicker. So if price does break through here, I would start to see if price can hold this as a resistance, yeah, and then break below. But the issue here might be is because now we're looking at the weekly chart, right? So it might take a while for price to come down here. So let's look at if we can find any short-term moves for now. Let me leave this on, yeah, this line. So maybe in the next pre-weekly analysis, if you can see if price does break this week, with a massive bearish engulfing, that would be very interesting. Let's look at down to the daily time frame. Daily structure is bullish, yeah. So we are seeing a lot of interesting stuff going on, right? Because the weekly is choppy in consolidation, the monthly is completely in consolidation, and the daily is bullish. So now we need our higher time frames to find direction, and that would be if the weekly can break this neckline here, and if daily can again break bearish, completely destroying all these structural levels here, yeah. So honestly, in my opinion, I think you should wait for price to break this area here. And this would be at, let's say, 38, almost around the 38.50 area. Let me mark it out. 38.50. Yeah. Let me make this visible on all time frames as well. I think it's not visible on the daily. Yeah. All right. So let me look at the daily once more. Yep, I think so. The best course of action here would be to wait. You can take a riskier move. Let me show you what a riskier move is. Maybe in this situation, if the structure point here breaks, yeah, and we go down to the daily time frame, and we can also see the structure here has broken through. There could be two things you can do, is see if price can pull in here and then take this short. But personally, if you want to take a higher probability short, would be to wait for this area here, or a medium risk would be maybe wait for this area here to break, yeah, and then maybe target these areas. And if this area doesn't breaks, then you can scale in, yeah. So this area would be around let's call it 3960, 3960, let's call it 3970 area. So, oops, 1 second. 3970, yep, there. So that's what that would be. This would be a medium probability, or to a lower probability, and this would be a high probability with S&P. All right, let's look at now. Let's go into the forex pairs. Let's look at GBP USD. So let's look at the monthly first. So what do we see with the monthly? The monthly is still remains bullish, bearish structure. And if you notice the trend line that I have, this is the yearly trend line, the red trend line. So we see prices kind of finding resistance there at the moment. Weekly, the weekly is bullish, right? So if you do notice, all these areas that we actually marked out, 1.23 was due to the bullish structure last week. So this candle here is interesting. What do we see? We see this technical term, I think, is called a hanging man candle. And usually on the top of a trend, when we do see a hanging man candle, that means price might be flipping bearish, right? And what I don't like about the candle is how the body is so tiny. That shows us, signifies how price has been in a range the last week, right? So this is not telling me much. Only thing I can notice, maybe price can reverse from here, possibly. And we see a trend line resistance form. So let's look at the daily time frame. But the structure does remain bullish with the weekly, because the only way the structure does break through here on the weekly, obviously, if the structure point here, let me clone this. If structure point down here breaks, right? Maybe this area here. So obviously, we are still not looking at short positions, a high probability short positions, till this area here breaks at 1.2, let's call it 1.21, this area here, yeah? Let's look at the daily time frame. The daily time frame, choppy, yeah? Very choppy range. Same thing, draw out, I can make life simpler, draw out consolidation box, right? And what do we see? Price been stuck in this range. Maybe even draw a wider consolidation box, right? Maybe all the way here. And we see price has been stuck inside a range for the last whole week, right? Since it made this big bullish run. And usually when we do see these kind of consolidations happen, it's usually when price wants to reverse, but not all the time, right? What do we see? Price finding a heavy resistance around this area at 1.24. So that's kind of correlating with my bias. Maybe price can flip here, possibly. And that also, again, aligns with our bias with the Dixie. So let's look at if you want to trade this week, I would maybe wait, because the only way you can take a trade this week, because the weekly at the moment is bullish, right? So it will be only right to maybe take long positions if the daily consolidation can break. And that would be two ways. Maybe let me look at the lower time frame. You see how this area has been so choppy the past week. Let me see where we can take a trade off from. Let's see the lower time frame. So I think, honestly, I really do think price needs to break through this area completely. I think maybe around that 1.24500, a quarter point. This would be a high probability long position because your weekly and your daily is aligned, yeah? But if price can break through and switch with that weekly structure point, where was it? Here. Price can break through this area here. This will be the highest probability short position, because not only your weekly and daily, your monthly structure is also bearish. So all of your time frames will be aligned, right? Let's go to 1.21. Let's to make it even. So these are the only positions that I'll be looking at with GU this week, probably. Yeah. Very choppy range. Avoid trading in here. Let's look at GJ. GJ has been the same story the past few months. This monthly structure, let me actually move this. Second, it's 1.6. All right, so let's look at the monthly structure. What is interesting about the monthly time frame to me is structure maintenance. What do I mean by structure maintenance? Price breaking the structure point here and maintaining under that structure by retesting it. Yeah, that is interesting. We see bearish structured form. Weekly time frame, very choppy, very choppy. Still in that consolidation since December, and no real bias formed here for me. Yeah, on the weekly, it's just consolidation. Daily, the same story. We're seeing price just bounce off a resistance and bounces off a support. And why we do see that? So we see consolidation, right? Price. This is the same exact analysis from previous week, pretty much. That shows you still in a very tight range, and the points of long and short hasn't changed, right? So the long position would be at this area here, and you see how price has been finding resistance again and again at that area, or a short position after the consolidation breaks below here at the daily structure point. Let's call it 160, 156, 250. Okay, so nothing changed with GJ at the moment. Yeah. All right, now let's look at gold. Gold has been on a rampage, absolute rampage of a rally for the past few weeks. Let's look at the monthly time frame first. What do we see with the monthly? Monthly is almost, I think this might be 2022 highs, almost closer to the 2022 high structure, right? You see how price comes around here and finds resistance. In my personal view, I think gold should maybe break the highs and maybe find new all-time highs. So let's see what happens this year. So the monthly is bullish. The weekly time frame is very, I would say it's kind of beautiful, right? You see how the bodies go, and as time goes on, we see smaller body, momentum slow down. Now I think we should see a reversal. Yeah. We were expecting a reversal last week. This is why, again, you need to be extremely patient with your entries, because last week, if you do notice, we kind of had a hanging man candle, right? But we didn't really see. Now this week we have a complete confirmation that we see bearish volume completely die off, and sellers have come into the market at this area. Yeah. So we might see price reverse here. Let's look at the daily time frame. Daily time frame is that it's in a very consolidation area, a lot of wicks, right? All right, so let's see. A lot of wicks here, and what would be a good structure is price after breaking through this structure point here. Is price actually finding support at the structure point? But price has been in a consolidation in this area here, so I wouldn't trade this range personally. I would probably, if you want to take short positions, maybe wait for this whole range to break as well. Let's see, probably around here. Maybe wait for this structure point, not this structure point, this consolidation area here to break, yeah? Because what would happen when this breaks, at least the daily time frame will now flip bearish, right, after it breaks through. So maybe wait for this area to break. And even the most higher probability would be this green line that I put out last week. This would be a very high probability short position at 1900. I think so, 1900. Right? Yep, let's call it 1905. So why is that? Because what do you notice towards the left? We see momentum, right? Nice clean range here, no choppiness. So that might give us a nice range of possibly of 266, 200 and around close to 300 pips, a big move, right? So if we can get a short position off from here, if everything aligns, maybe that would be a very high probability shot. Or a lower probability shot would be for this range here to completely break off and maybe taking a position around the 1920 area. And I think if you're going to take a position here, the range would be to be careful. Maybe look at this area first here, a 1911.5. That would be around 80 pips. And then the second area of interest would be for you to target 1905 at 153. That's around 153 pips. But if price does also break 1905, you can scale in by adding another position and targeting all the way through down here for a big move of around 450 pips almost. Yeah. So a lot of the market at the moment is completely a reflection of last week, completely choppy, a lot of consolidation. So wait for price to completely break through these areas. Yeah. I think we're done. Any other pairs you wanted me to look at? All clear?
Yeah, I think that looks all juicy.
Yeah, brilliant.
All right. All right, bro. Stop the recording.